Three revolutions in one. We've got the money revolution. That's really Bitcoin and Ether. And that is what Art Laffer, my mentor, said, oh my gosh, this is the rules-based monetary system I've been waiting for since we went off the gold exchange standard in the early 70s. It's a very big idea. I think when people think of artificial intelligence, they have an internet mindset. What's going to be the killer app here? That's not the right question. You want to figure out how to harness AI to increase productivity.
The future of finance is evolving rapidly with the rise of cryptocurrencies, decentralized finance, and artificial intelligence, which are transforming traditional systems and providing new alternatives and accessibility for everyday investors. In today's video, ARK Invest CEO Cathie Wood shared insights in a discussion with Grant Cardone, where she highlighted Bitcoin's role in the monetary revolution, the creation of a rules-based monetary system, and the importance of decentralization and transparency. Wood discussed ARK's emphasis on Bitcoin, DeFi, digital property rights, and AI, all aimed at empowering individual investors through new technologies. She believes that, despite challenges, DeFi will continue to grow, much like the resilient development of the Internet. ARK Invest seeks to expand in this innovative space by focusing on the disruptive financial impact of Bitcoin and DeFi.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
But if we're in a world of disruptive innovation, the likes of which we have not seen in more than 100 years, then the risk is that the traditional world order is going to be disrupted. So that is not a place of safety. But the reason that happened was the tech and telecom bust, 08-09, and feelings of career risk and business risk. So a very defensive posture. And yet all of this innovation, the seeds of which were planted in the 20 years that ended in the tech and telecom bubble, those seeds have been germinating and they are beginning to flourish. And so this very defensive posture is inconsistent with the possibilities ahead. ARK Invest and all of our ETFs, which you mentioned, so ARKK, ARKW, all of those are in the public equity markets, but we call ourselves the closest you'll find to a venture capital company in the public equity markets where stocks are listed on exchanges. And our due diligence is centered around something called Wright's Law, which is a relative of Moore's Law. Okay. So what we're trying to figure out is how quickly the costs associated with these new technologies are going to fall, and how quickly those cost declines will turn into price declines, which will enable these new technologies to scale across sectors. So we're looking at mass market opportunities caused by technologically enabled innovation that can be measured. The cost declines can be measured. We're very methodical about that. Three revolutions in one. We've got the money revolution. That's really Bitcoin and Ether. And that is what Art Laffer, my mentor, said, oh my gosh, this is the rules-based monetary system I've been waiting for since we went off the gold exchange standard in the early 70s. It's a very big idea. Then we've got the financial services revolution. FTX has certainly heard it. But what was FTX? Sam Bankman-Fried did not even like Bitcoin. He didn't like it because it was too decentralized, too transparent, and he couldn't control it. FTX was completely opaque and centralized. It almost proves the point that this movement towards decentralization and transparency is the wave of the future. And we do think DeFi, it is. We're convinced of it. DeFi has had a setback. But this is what always happens early in
the internet busted in 2000. It didn't go away.
And then the third revolution is digital property rights. That, as an economist by training, there is nothing like property rights to raise people and countries out of poverty. This is digital property rights. There's going to be the digital and the physical world will be meeting each other. But if you look at how, maybe not your children, because I know they're homeschooled, so they probably, but if you look at how young people spend their lives, how much of their lives do they spend online?
Yeah.
And their identities are now being formed online. And the authenticity of that identity, the ownership of that identity is becoming critically important to them. So it's a world that you and I are not living in, but it is alive and well, and it is going to burgeon in a way that is going to surprise people who are not paying attention.
Cathie Wood views Bitcoin as having a transformative impact on finance, comparable to the internet. Through ARK Invest's Titan app, non-accredited investors can now participate in venture capital with as little as $500, opening up access to emerging technologies. Wood also sees artificial intelligence as a driver of productivity and efficiency, with companies like Teladoc, Exact Sciences, and Roku, those leveraging AI and vast private data, well-positioned to thrive. Her vision is to empower people to shape the future by using disruptive technology to level the playing field and unlock new opportunities. Now, let's return to the interview for more insights from Cathie Wood.
If you're on Zoom and
you're right.
You're in the digital universe. If you think about the earliest manifestation, when we're trying to help people understand what NFTs are, you know, people are talking about avatars, but the first real Web3 experience was Zoom, right? So you're used to that. It is so exciting.
Yeah.
Look, you're 10x. 13 trillion to 200 trillion. Doesn't that pull you in right there? And it is why we feel this movement is so important. And we feel, and I was listening to some of the commentary here, we feel that everyone needs to be a part of it. And that is why we have broken all the rules, or they're not exactly rules, but the conventions, and we have started our own public-private, dominated by private companies, venture fund that non-accredited investors for $500 can invest in. And we're doing it, talk about the digital world, we're doing it with social distribution through an app called the Titan app. So for $500, individuals who were blocked because they have the right income threshold or asset threshold, they were blocked from these 10xers, 100xers. Even the wealthiest people are having trouble getting into deals because that world of deal making is so small. I mean, we are able to get into deals that foundations and endowments and small institutions are not able to get into because we're doing something different. And the venture world wants to be associated. They've been criticized for not paying attention to non-accredited investors. So they are actually helping us, and we are getting into deals. But to give you a sense of how important I believe this investor base is, if I know our client base in the public world, they are non-accredited for the most part. They're the ETFs, the base is, so ARKK, ARKF, these are ARK's ETFs.
These are liquid funds I can get in today, get out tomorrow.
You can get in, out, you can get in, and a minute later get out, right? That's how liquid they are. As I've studied our client base, I have been struck that they know so much more about the technologies we're investing in because they read our research. We give our research away. They're grateful for it. They want opportunities, right? If you ask me who the accredited investors are when it comes to knowledge base, which is how I think this should be measured, it's our client base. It is not the institutions. It is not the high net worth individuals. It is individuals who are excited about how these technologies are going to transform our lives, how they're going to level the playing field and give everyone a shot at an amazing future. I think when people think of artificial intelligence, they have an internet mindset. What's going to be the killer app here? That's not the right question. You want to figure out how to harness AI to increase productivity, increase your efficiency. That's the first killer app. And the second killer app is really all about data. The companies with really large pools of proprietary data, as some of these companies I've just imagined.
Cathie Wood sees Bitcoin as a pivotal force in the monetary revolution, creating a rules-based monetary system, a significant development, especially given the U.S. departure from the gold standard in the 1970s. Her mentor, Art Laffer, hailed Bitcoin as the structured system he'd hoped for since the end of the gold standard. Meanwhile, Bitcoin's price trend has sparked heated debate among analysts. Crypto analyst Matthew Hyland predicts a potential 12% drop from the current $67,200 level to around $58,800, which he believes would reinforce a bearish outlook. Anything less, he says, would be minor market noise. Glassnode's James Check advises long-term investors to remain patient through potential declines, noting that high leverage raises the risk of market shakeouts. On October 15, Bitcoin futures contracts reached a record high of 566,000, signaling strong market activity and contributing to a greed sentiment, with the Crypto Fear and Greed Index showing a score of 73, up 32 points since October 10. Not all analysts foresee a major correction. Pseudonymous trader Wolf anticipates a slight dip to the $63,800, $64,500 range before breaking through resistance, contrasting Hyland's bearish view. What do you see as the most significant impact of Bitcoin and decentralized finance on the traditional financial system? How do you think individual investors stand to benefit? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.